from Credit Human. I've been with Credit Human for about 9 years now, and so I go out into all of the Alamo colleges actually and give these presentations to students. Today we're talking about really exploring the banking fundamentals and really talking about the ins and outs of why we should have an institution, maybe even building a relationship with an institution, and kind of talking about how that'll help you better manage your finances by having that. And so some of the ways to start setting up a bank account if you don't have one already is, for one, you do have to choose the right account for you. And so some of the different types of accounts that they have, whether it be a checking account, a savings account, a high interest yield savings account, a money market, whatever it is that you're trying to do, some of these institutions should have those different account types. But it's good to know what it is that you're actually looking for before going into that institution. The next thing is gathering required documentation. And so you're going to most likely need a driver's license, passport, or some type of identification, Texas identification. You'll need your social security number, not the card, and then proof of address if that is not already on your ID. So for example, the address on your ID is somewhere you used to live, then you might need to bring that with you if you do decide to open up an account. The third thing is completing the application process. So a lot of times you're able to open that up, whether it be online, you can also do it in person. Credit Human has a really good app that you can just go through the link. It takes about 7 minutes to open up your account online, and then you get your account number and everything already. So just depending on how that is. The other one is the terms and conditions. These are those little fine print, tiny numbers on the bottom of your, end of your contract, right? For Credit Human, they do give you that up front. They tell you about the terms and conditions. And so you want to know, what are some of the fees? What are some of the interest rates? What are your limits, right? If I use my card, how many times can I use it before you start charging me? Those are some things to ask. And I know at some other institutions, sometimes they have limitations on how many times you can actually use your card. So those are some of the things we want to take a look at when we're trying to open up our bank account. So now that we have the fundamentals of that, why is it important to establish a relationship with the financial institution? Does anybody know? Anyone know why it's important? And so it's important to build a relationship with an institution because it often leads to better financial advice, sometimes personalized financial advice. Another thing is staying in communication with them through regular check-ins. With the financial health centers, they have appointments that they can set up with their members and continue to offer them services that might benefit them. And then knowledge of services that might enhance your well-being. And so with this, they can also offer you other services that might help you. And it might be an app, a checking account, it might be a share certificate, whatever it might be. But having knowledge of this really does help. And then, of course, if you are in need of help, you can always go to your banking institution because you've already built that relationship with them. And oftentimes, it's really the first place people do go when they need a loan or when they're going to buy a car, they're going to buy a house. They're like, does my institution offer that? Because I already bank there. So it just makes it a lot easier. So we have checking accounts and then we have savings accounts. Sometimes we don't really understand what each of them does, but with the checking accounts, those are used for everyday use. Transactions, money coming in, making purchases, money coming out. Your savings accounts, on the other hand, are used for when we want to deposit money and keep it in there for a good while, focusing on our longer term goals, focusing on other things that we might want to save that money for in the future, and then it also earns interest as well on those accounts. And then some of the key benefits of direct deposit. Does anyone in here already utilize direct deposit? Yeah? Okay. Awesome.
Yeah.
And so 80% of employees actually require you to have direct deposit. So most employers right now, if you were to go into a new job, would probably ask you for a direct deposit form so they can give you your direct deposit. And so a lot of companies are really aiming that way. And then 95% more people say that they like getting paid through their direct deposit instead of their paper check because it's just real easy and convenient, right? You wake up on Friday, you know you get paid today, you open your bank account or you check your account and your money's right there. Super simple. We don't got to deposit a check. We don't got to go put it into anything. It's just right there. And then this just changed. It's 100% coming up soon. but right now it's 99% of government benefits actually receive their payments through direct deposit. So if you were receiving any type of government payments, it would more than likely be through direct deposit. And there's typically no fee associated with that. They don't charge anything to go ahead and have that service for you, and most places do offer that. And then 35% of individuals using direct deposit say that they actually save money more consistently, setting up those automatic transfers as well to help with their budgeting and their savings. And so really direct deposit helps in all these different areas. And it doesn't seem crazy, but back then most people got paid with checks. And once you got your check, you had to go cash your check. And then once you cashed your check, you had to go pay all your bills. And so it was just a lot of other ways to do it. This one just seems a lot simpler. The other thing that banking institutions offer in general is share certificates. And so share certificates are higher interest, it's locked away for a certain period of time, and then they go ahead and once it's over, your money is available, and then you have more interest on top of that. So we're paying you to put your money in here for a certain period of time. It can be 3 months, it can be up to 10 years. And so some of the benefits of high interest savings accounts, like a money market, things like that, they just earn more interest. So what is interest? Anybody know? What's interest? Yeah.
Like an amount you have to pay for borrowing money?
Or an amount they pay you for having it in there. So those are like dividends. So dividends are the amount of money that you get for them to pay you to keep that money in there. And so these have higher rates. And so with this, they might give you, $50 to keep your money in there as opposed to giving you $10 to keep your money in there. And so that's the difference here. It's also safe and protected. It's still like a regular savings account. It just earns higher interest. It probably has different terms and conditions. So you want to look at those to make sure that you're not going to lose money in the long run. And then the other thing is that they are insured, whether it's a bank, it's through FDIC, or if it's a credit union, it's through NCUA. So your money is insured in case the credit union or the bank were to go under. And then it also helps you save money automatically. Your money's already in there. You can have the interest go back into that account. Sometimes people have themselves paid that interest and they live off of it. Wouldn't that be great, right? We just live off of the money in our savings account later. That sounds like a good idea, right? Well, hopefully we all get there one day. And then just a quick overview of some of the products and services that banking institutions offer. We talked about the checking and the savings account, but what about loans and credit cards? So banking institutions or financial institutions also offer vehicle loans. It could be a mortgage like we talked about earlier. Some of them may even give you a student loan. So it's good to see what it is that they actually offer. The other thing is credit cards. They also allow you to borrow funds as well. And so these are all the different products that you can actually get from your banking institution. And so now that we talked about all of those products, how the bank works, why it's important, I'm going to talk to you real quick about these financial health components because it's important to have these when we're managing our finances day to day. The first component is day-to-day financial management, and that's being able to pay all your bills and living expenses, with having money left over. And then once we have that managed, we can go to resilience to weather ups and downs. So we have our day-to-day figured out. Now, what happens if an emergency happens? Can I afford it? What do I do? Having those plans in action. And then we go to our longer term opportunity. Now we have our day-to-day set up. I have my emergency fund saved up. I have credit if I need it. Now I can start buying a home or saving for retirement because we have all those other stuff handled. And so these are what it means to be financially healthy. You're working on all of these simultaneously together. And so how to manage your money. And so with the spending plan worksheet, Crystal went ahead and handed that out. That really helps us just put all our money in one place. It tells us what money's coming in, where it's going, and how much money is coming out. It also tells us how much money we have left over. And so this is one of the tools that Credit Human can help you use, or you can utilize without being a member to help manage your finances a little bit better. And so a spending plan is not about giving anything up. It's really just about making thoughtful choices. And so you put on there that, if you spend, I think my one thing is that my daughter loves to buy toys and stuff. So I have a budget in my head of like at least 20 to 30 bucks a month that I know I'm going to be buying her things randomly throughout. That's one of my simpler ways. Another one is that I know my husband loves to shop at the corner store, so I like to leave a little bit of money in there for him, so I know that's what he's going to be doing. So really all we're doing is just planning it out. All we're saying is we know this is going to happen, we're just putting it on this piece of paper, so that way we know where it's going and we know how much we have left over. Once we figure out what we have left over, that's our slack. And so once we have our slack, we can actually now create a plan or a savings plan after that. And so we add up all of our categories here. We have our debt, living and income expense, our debt, housing and living expenses, and that gives us our total expenses here. And so back to these financial health components. Once we have that day-to-day management, what do we do next? We have it all set up. We have our bills put in there. What's next? We talked about it earlier. What's after day-to-day financial management? And so now we're going to, resilience, right? We're going to move to the next one. We have our day-to-day set up. Now we need to figure out how do we set up our emergency fund? How do we get that resilience? You know, what happens if there's an emergency? What do I do? Okay, so what we can start doing is planning, right? We all know emergencies are a part of life. It is going to happen. I just had one the other day. They just happen. So identify your financial slack after you do your income from your expenses. That'll tell us what money do we have left over to set up this plan. Once we have that, we can set a goal. And we want to set a SMART goal so that way we know it's measurable, attainable, and it's not something that we're not going to be able to reach. Once we have that, we can determine how much we're going to be saving in our time frame. And then we want to possibly set up automatic contributions. For me, when I had first set up my account, I had did $20 to my savings account every time I got paid. It was just 20 bucks. I was like, I won't miss 20. 20 is so small, I can't see, right? It doesn't feel it. And so then that's exactly how I started. I started with just 20, and then I totally forgot about it. I was like, wait a minute, where's this money going? And I was like, oh my God, I set up that savings account. Totally forgot about it. A few weeks had gone by. I was like, oh my God, there's $100 in there. I'm just gonna keep going. I'm gonna up it to 30, but I'm not gonna tell my brain that. I'm just gonna do it, and then we're gonna forget about it. And that's exactly what I did. And so as that kept going, my contributions finally kept going up. And so once you hit your target, you can review it and adjust it. Just like I said, I had 20 going, and I was like, man, can you imagine if I had like 40 going? I'd get it double. 40 is not a lot, right? Okay, that's like Olive Garden. All right, I can do 40 bucks, right? And so that's what I started doing. And so I reevaluated it, I tried it again, and then I adjusted my plan. Something happened, I had to go back down to 20, but that's okay. I just continued to adjust my plan. And that's what we want. We want you to be able to continue to adjust it and just kind of monitor it and make it work for you. Now that we have our resilience, what's next?
I have a question.
Yes, ma'am.
So you started with 20, but you could start as low as like $5.
Yeah,
right?
you can start with
Just
$1.
Extra
Yeah.
$5
Mhm.
and just kind of put it to the side. Okay.
I remember when I was in college, my first account I had was with Credit Union, and I set up my first savings account. My first goal was $500 because I said, in my life, have I never saved $500 ever? And I was like, it just seems like a really cool goal to have. I started with $5. With those $5, I think it took me 6 months actually to actually get $500, but it started with 5, I upped it to 10, and then I think it went all the way to $25. That was the most I ever did. But I actually reached that goal, and it took me a good while. So after we do our resilience ups and downs, we have our longer term opportunity. And with that one, we're able to either buy a home, 401k, but if you need any help with that, that is what our financial health centers are here for, to help us with those opportunities, with the planning. And so I have Selena to come on up here and speak to you guys about the financial health centers that we have at Credit Union.
Hi everyone, my name is Selena. I am one of the specialists at our financial health center. I actually work at this financial health center that you see right here in this picture. That is our Pearl location. And so what we do at our financial health centers is we help you at whatever stage you're at in your financial journey. Maybe you're starting out, right? Maybe you don't know what to do. Maybe you don't even have a bank account. She talked about opening up a checking account, opening up a savings account. If that's where you're starting, that's what we're here to help you with. You also have those spending plans in front of you. We go over that with our members as well, because maybe you are already established, but you don't really know where to keep going from here or where your money is going. Sitting down and taking time to do that. I have to do it myself probably like every 6 months, because for me, I know like my subscription services, I lose track of them. You have to buy a subscription for everything nowadays. So like for me, I have to go through all of that. When we do that, we'll usually ask you to set up an appointment with us, because depending on where you're at and what you're wanting to accomplish that day, we'll need either a month of your statements or at least 2 months of your statements to kind of see what your spending habits are. Once we kind of figure that out and figure out what you're trying to do, that's where we make a plan, if we're able to make a plan at that time. Maybe you don't have a whole lot of income to build that emergency savings or put so much in your savings. Like Destiny started out with $20, but you can start out with $5. You can even start out with $3. I had one member that said that they wanted to save $1 every paycheck, because $1 to them was something that they've never been able to do before, and that was their goal. And so we're here to help you with that. We also go over loans. Where are you at in your credit process? Maybe you've never had a credit card, or maybe you've had a credit card and you didn't manage it correctly. I've done that personally myself. I think all of us have done that at some point in our lives, and we're here to help you with that. Everything that you discuss with us at the Financial Health Centers is private. It is a safe space for you to come and talk about your finances, because they can be stressful. And so we're here to kind of help you manage that and take the stress off, because a lot of people don't realize how much financial stress kind of trickles into their daily lives, and we're already stressed out. There's enough things going on in our lives, and the last thing we want to be worrying about is our finances. So we're here to have that conversation with you and be your financial accountability buddy and help you with whatever you might need.
And so that leaves me with this final quote with you guys. And knowing your banking choices and learning how to manage your money well are key steps toward building a stable and successful financial future. And I do really believe that. My first job, I was 16 and I worked at HB, and they were like, well, you need a bank account because we only do direct deposit. And I was like, I've never had a bank account. So I went with my mom, and she wasn't able to open one because she owed institutions money. And so I told her, I was like, what am I going to do? I need a bank account. And so I actually had to go to my dad and ask my dad to come with me to security service to open up a bank account with me because my mom could not. And so it was a really hard situation in that moment. I didn't feel comfortable having my dad there be on that account with me. But this was something that I had to do in that moment because I was having my first job. And so look at me now. I have all my other institutions. I don't just have one, but that was where it started. And then getting my job and paying my bills and stuff like that, it really did help me succeed. And so that's the end of our presentation.